Derek, the management of one's wealth for high net worth individuals, for entrepreneurs, can be complex in the extreme. As a private bank, what are the levers that you're trying to pull post-budget to help people and advise people?
I think it's our job to take away that complexity as far as the client's concerned. We often come in at the tail end of this, so we work very closely with other advisors, but we're seeing the client when they've sold a business or sold some land or sold something, and they've suddenly got a large amount of cash, and all the reliefs have disappeared, and now everything's taxable. So our job is to try and make it as tax efficient as possible, doing things like, it's small but using people's ISA allowances each year, which soon build up. It's to create portfolios for people where they need an income, because previously they've had an income from the business and they now suddenly are bereft of income. So their portfolio needs to give them an income that's tax efficient. So instead of paying income tax, we'll create a portfolio that creates capital gains each year, which are then paid out to the client. So as far as the client's concerned, it's still income. But from a tax perspective, it's charged at capital gains tax rates, often 28% or 18%. And there are other investments around as well, not too aggressive, that you can defer any kind of tax for up to 20 years. Until such time as Eric mentioned, tax rates might go down in the future, and then when you start taking a larger amount of income from it, you benefit from lower rates, or you can give things to children and so on. We also, where clients are a little bit older, they have substantial property interests and business or agricultural interests. We will lend money against their house. You may wonder why a 70-year-old wants a big mortgage, but it makes sense if that money is then going to be used to go into a business or a farm, and then we can reduce inheritance tax quite substantially by doing that. And our lending tends to be open-ended with no firm repayments in it, because it's there to reduce tax. So there's lots of things you can do. It is complex, and our job is to make it not complex to you, the client.
That's what creation of debt is actually quite a common part of avoiding inheritance tax.
It is. And we're a bank at the end of the day. We like to lend money.
Some may say different at the moment.
I mean, you don't necessarily have to create debt to a bank, of course. I mean, you can create a debt to your spouse, which will still, with the right planning, will reduce your inheritance taxes.